Hi, Charles Sizemore here. So today I'm going to address a very basic question, but it's a question I get surprisingly all the time. And that is, what is a dividend? The most fundamental, basic question of any income investor here, just what is a dividend? Well, we'll get into that. Most people have a general idea that a dividend is income. It's income thrown off by a stock. That's true, but I think it's more instructive to look at what a dividend is not and then kind of compare and contrast. So a dividend is not bond interest. It's quite different. Bond interest is required to be paid. It's a contractual obligation. If a company issues a bond, it's a debt obligation, and if they fail to pay their interest payment, they fail to make that coupon payment, they're in violation of their agreement, and the creditor, the person who buys the bond, can actually go after their assets. They can sue them. If the company files for bankruptcy, the bondholder is first in line to collect. Bondholders have rights in that respect. A dividend is a different deal. Dividend is a distribution of profits. So if you're a shareholder in the company, you are a partial owner of that company. When that company generates a profit, they can do several things with that profit. They can use it to reinvest in the business, and that's of course important. You have to invest in people, in new factories and offices, what have you. But there's usually a decent bit left over after that. That excess profit can either just be kept in cash in the bank, and a lot of tech companies do that. It can be used to repurchase stock, or it can be distributed to the owners in the form of a dividend. So the difference between a dividend and, say, bond interest is that dividend is not a contractual obligation. The company has agreed to pay its owners, but if they change their mind later, if they cut that dividend, if they suspend it, if they eliminate it altogether, that's okay. The investors will be upset, but they have no recourse. The company can't be sued for that. So bond interest is safer than dividend payments. It's if you're an investor, if you want absolute maximum safety, you have to go for bond interest. Now, that being what it is, why would you go for dividends instead of bonds? The answer is very simple. Dividend paying stocks tend to raise that payout over time if they're healthy, well-run companies. With a bond, that coupon payment you get is the only payment you're ever going to get. If that bond is paying, $50 twice a year, that's all you're ever going to get over the length of that bond. It doesn't change. Whereas with a good dividend paying stock, if the company is continuing to grow its profits, if the company is doing well, that dividend will actually increase. It may be, $5 a share this year. It might be $6 a share next year. It might be 7. Some companies have, really fast growing companies have raised their dividends multiple times in a single year. Sometimes they'll double their dividend if they're doing particularly well. So, that's not real common, by the way, but it does happen. So when you buy a dividend paying stock in lieu of a bond or a CD or what have you, you're doing so in the anticipation of that dividend growing over time. Now, there's other benefits as well. Dividends are typically taxed at a lower rate than bond interest, so that is an issue for some very tax-sensitive investors. But most of all, what it comes down to is just growth. You want income first. That's why you're doing this. That's why you're even looking at dividend-paying stocks. But you also want to keep track of inflation. You want to outpace inflation over time. And dividend-paying stocks are, generally speaking, as far as I've seen in all of my research, dividend-paying stocks are the best income investment that will keep you ahead of inflation over time. So I hope that clears it up. If you have more questions, or you are interested in income investing, this is something you like, this is something you want to pursue, do follow the links to my income newsletter, Peak Income. You may also want to check me out on The Rich Investor. It's our daily e-letter. I contribute at least once a week. We cover a range of topics, among them income investing.